All right, what is up, YouTube? So usually, I come out with investment decisions, but right now I just found out that oil is near the bottom of the cycle. Now, let me go ahead and screen share so exactly show you exactly what I'm talking about. I last alerted you guys, when oil is going to bounce, but now oil is definitely bouncing, and I'm a buyer of UWT. But I'm gonna show you exactly why. We're gonna get this chart up here right here. Okay. So as we see, this is not a live shot of the oil prices. Oil prices are almost at just about $50 here. But as we see, we're at that lower end of that range. And hold on, let me try to make this perfect here because I have it on my other TD account. Let me remove all drawings here. Oh wait, okay. Remove all drawings. I'm gonna go ahead and draw a live trend line for you guys so that way you know exactly what that looks like. Okay, so let me go ahead and show you guys exactly why I'm drawing them through, the line here to give you that, that perfect picture right here that you're seeing. Okay, so let me break down the price right here. So this is the last time a bid was actually held at oil. We see that, we almost broke that trend line, but the trend line is not, it's not perfectly accurate. But as we see, there is a support layer right here, and there is an actual support layer right there. And as you see, we're bouncing from that support layer right here. Now, as close as we get to $50, we might break up to $50 and go even higher, but we will have problems. You see the daily moving average cost for oil prices to be at 51, but right now we're trading at 49. Now, if we use our daily moving average, let me go ahead and buy some leverage right now. So let me open up a trade so that way you guys can actually see, exactly what I'm talking about and see the profits actually stack up while I conduct this live trade. Now, oil is definitely at the weak end of the buyers. So let me go ahead and open that up. As you see, oil's at the weekend of the buyers. We see the chalk and oscillator calls for this thing to go higher. And as we see, historically, chalk and oscillator is always right. It predicts the price perfectly. We see oversold levels here, and we see we're getting close to that oversold level right there. And we can probably say it's a technical bottom in the RSI right there or right here, depending on how you look at the chart. But as you see, oil price can get the low as this right here, and we're definitely going to see a bounce. So let me go ahead and take a look at UWTI or UWT. This is what it's called now. We see that it's an uptrend forming here. We don't have any historical prices going back because, UWTI was closed down and Citigroup was able to open up this, this stock right here. So let's go ahead and buy, about 1,000 shares of UWT. We're going to hold that for about, let's say, maybe 2 weeks or maybe a week. And we're definitely going to see the profit stack up here because oil is at weakness right now, and we definitely want to take advantage of that oil weakness. So let's go ahead and open up a market order. Like I said, the market is definitely delayed here. So, it really doesn't matter what price we get filled at because I'm thinking this thing goes back up to $20 or it probably meets $20 at some point because of the weakness of buyers and sellers. Now we're filled at 1810. Like I said, it's a 15-minute delay. So it depends on where you get filled at. So we see daily moving average cost for this thing to get checked up to $20. So that provides $2 of upside. And we do see one green day here. It might turn red tomorrow. But from what we're seeing right here, this green day is definitely signaling a bottom. So if we can hold this green day, oil might be in a bottom process to making an uptrend here. So we can probably see an uptrend here with, the small chart that we do have. We can probably draw, a small uptrend here. Let's get the trend line. Well, we can't even draw a trend line because, we have a double bottom process here at 15.9. And, we really can't get, like I said, these leverage ETFs, they definitely don't provide a perfect, perfect picture. But if you go into the actual contract, this is where you start to get the perfect picture. This is when you know when to buy the actual oil ETF. Or let's say if gold is going to go down, like I showed you guys in the previous trade that I did, that I did execute. I said oil is going to go down because the market is definitely going to get stronger, right? So we see gold go down, but what I did was I surveyed the contract. After I surveyed the contract, I looked at what follows the contract on an inverse related, inverse related pattern. Now that I found something that follows something on an inverse related pattern, let's go ahead and look and see which one is the most profitable, or we could probably say which one is the most risky as well. That'll provide more profit. So we look at the 3 times bear. So we can use Dust, or we can use the various other gold ETFs that they do have. But Dust definitely stuck out to me because we were in a bottom process here, like I alerted you guys earlier, in the year. So we have to pay attention to where the ETFs move. We have to pay attention to what the contracts, show us. So if we know where the contract is going, like oil, that is a plus for us, because last time, I was predicting the bottom for oil. We see it go higher every single time. RSI is showing us that oil is going to go higher, and we see oil looks like it's going to go higher. So it's definitely right here at this a breach of maybe hitting $50, and maybe it's in the daily moving average maybe act as hard resistance on the oil rig count. But that depends on what exactly happens. The market is definitely optimistic right now, but as you see, oil was red and green just about throughout the whole day, and now oil decided to go ahead and move higher. Maybe some optimism on the OPEC cuts, but like I showed you guys earlier, if you read and understand where the stocks are going, you will definitely be more profitable once you start trading. So we have to understand where the contracts are going. After we understand where the contracts are going, we go ahead and pick the ETFs that we want to follow or we want to trade. And that's simply how you can make 100%, every single month, throughout the year. As long as you know where the contract is going, your money is definitely safe, and you can price your risk reward very easily. So a lot of people, they look at the ETF individually, right? So let's say, okay, we see that it's a bottom right here, but who really cares? Because we know what this stock follows. If we go to Direction Gold Shares, we go straight to the GDX, and that's what I think. That's what it follows. So a lot of these prices are not accurate when you do follow the ETFs, because they do move with certain stocks, and they do provide an inaccurate type of reading on the stock. So we definitely want to be very careful with that, because we might be pricing a bottom for the ETF, but you're forgetting that the contract is showing that there is no bottom for about 30 to 40 points. So we want to be careful, with what we trade, and we want to, stay away from people that are promoting stocks for us to buy. If there's no fundamental or technical reasons for us to buy it, and there is no homework being done for us to actually go ahead and say, okay, I'm going to put my money out here, let's stay away from that trade, and let's go to something that we can actually do our homework with, and we can feel confident in, and we can actually start to produce more money. As we see, GDX is almost becoming oversold. But like I said, guys, we see GDX had a slide for about a whole week before it became oversold. It was at 30 for the longest. But what you guys didn't know is you cannot buy this thing until you know where the to the contract is going. Once we understand where the contract is going, that's when we can buy. We don't want to buy it just because the technicals here are telling us things. We want to pay attention to the way the contract moves. Once we understand the way the contract moves, we'll understand, where the stock is going. So I'm going to keep preaching that until you guys actually understand it, because a lot of scammers are out there, they're trying to, get you to buy all kinds of crap. So we see right here, we're down about 53, 20, because I bought it, 1810, but who cares? Like I showed you guys, for the last couple of weeks, if we're patient, if we follow the technicals, we will be rewarded handsomely. Like I just closed out this trade for about 13 grand. Like I said, this is simulated trading, so it's not really, it's not real. But this definitely, I would say the more patient you are, the more rewards you will get, because a lot of people are impatient. They look for easy ways, easy way out, and we definitely want to stay away from the people that are trying to promote us to go to, to get an easy way out, because at some point, penny stocks will definitely be heavily regulated at some point. I'm assuming, because a lot of pump and dumps that do happen with these company stocks. But until now, a lot of people are able to get away with pumping stocks up and having other people to buy it, and then that lets them to go ahead and sell their shares and and promote that they're becoming successful. But really, what happens is that you're really losing money, and the guy who's promoting it is actually making the money. So, like I said, we want to stay away from there. And let's go ahead and see what oil's probably, oil probably fell back down. But oil definitely fell back down. But for right now, we're looking at oil on a long-term perspective. Oil is definitely showing us, that it has room to go. And, once we're able to see, the room to go for oil, that's when we'll go ahead and sell. Because right now we're definitely at a point to where, the bottom is here. and we have to hold that support. Once we hold that support, we definitely go higher. And as I showed you guys, we're close to that support level, and we have one green day so far. So if we're able to hold that one green day, this could be signaling a bottom or a small bottom or maybe even a temporary bottom before we break out. But like I was saying, oil is definitely going to go higher. Like oil, you see oil right here wants to go to 50. Oil wants to go to 50. Oil wants to go to 50. Oil gets to 50, goes back down. Oil wants to go to 50, and now we're restarting that pattern again to where oil wants to go to 50 again. So pay attention to the patterns in the contracts, and that way you'll be more successful with the ETFs. So remember, if somebody promotes an ETF to you, tell them, hold on, let me look at the contract, right? We want to look at the contract, or if they promote a short ETF, we say, okay, hold on, let me look at the market, before I actually think about shorting the market. So no, that's all I have for you guys. I just want to alert you, that I bought a position in oil, and I'm going to hold it here for maybe about a week or two, before we see a, really good bounce here. As we see, daily moving average showed us that, oil definitely had to go higher here. We see about, a double bottom here, break the trend, bounce back down, and now we're going back to that that reset level to where, it's about to start this pattern up again. Summer's definitely coming up. Oil and gas, we want to pay attention to that. Also, let's check out oil. Let's check out gas. We see gas is definitely, getting hammered for right now. Daily moving average says $3.18 is where, gas should be, but right now gas is at $3.03. So let's pay attention to that. We're gonna focus on gas when it becomes oversold, but until now we're focusing on oil. And if you want to limit your risk, we might want to do oil producers such as Exxon, but Exxon is definitely benefiting from the rally today. So 80.3 was definitely your buying price. So if you missed out on that, Exxon will definitely come back down with the market, to present a buying opportunity. But for right now, $80 is definitely a solid bottom for oil. For Exxon. So that's all I have for you guys. Goldman Sachs is definitely taking off. We see it become a double bottom in the oversold, or the double bottom RSI, and hold that pattern throughout. And at some point, we will break that trend, and Goldman Sachs will go down and present another buying opportunity for people that actually didn't miss out on it. So let's check out with the banks. So we see the banks. We see the bottom at $41, like I alerted you guys before. $41. And then after that 41, we gapped up and went to 46. We might be piercing 50 next. So like I said, we have to follow I would say follow the contract, but there's no contract for the bank. So we follow the sector of the bank, and that way we follow the other ETF that follows the banking sector. So that's that pretty much sums it up. Can't think of anything else to tell you guys, but we're gonna watch out for these Trump policies, to make sure that they're gonna be good for the market. And as we see here, small cap stocks are definitely taking off. So you'd bought right here, $90. You'd have made a pretty good profit, but people still chasing penny stocks, still thinking that there is no way to play penny stocks with blue chip companies. But as you see here, this is a small cap ETF. Instead of trading penny stocks, you definitely could have bought this and made about 3% on a day, or maybe even better if you include yesterday. So we must be aware of all ETFs. Like I said, I know all ETFs like the back of my hand. I know every single one that is listed on the stock exchange, except maybe for some bonds here and there. But I'm pretty good with the bond ETFs. But yeah, so take care and make sure you guys are having a good day, and make sure you do not force any buying that that doesn't need to be forced. I know the market is up, and you might want to jump into the market, but definitely don't force any buying, because the market is starting to get overbought at some point. There might be a time to where we have to get back in and start shorting the market. So take care. Do your research, and never take anyone's advice without doing your homework.